internet. It's been a interesting day so far. Smack dab in the middle of it. Lots of things going on in the world of crypto, and specifically with Bitcoin. What we're looking at in the past day or two, since about yesterday, is a highly expected move as a result of a nice intersect of the power mean as RMLR, the daily, and on some 4-hour and lower time frames as well. This should come as no surprise to anybody trading the VEPs. What we're seeing with the move up and the pullback, and then now the current move up, these are all things that have happened as a result of the volatility, the entropy, the probability, and the statistics. And what's funny is that, of course, we see these things happening all the time with leading information. We know when things are likely to move, and whatever the direction they move is usually fairly obvious based on probabilities, with things like volatility and correlation, entropy and correlation, variance and correlation, and future predictors like projection loss and the reverse mean of log returns and the power mean. So we have a fairly good idea of which direction things are likely to move and when. Now, if you notice on other YouTube channels where they talk about crypto trading and whatnot, they will often give you horribly misleading and misinforming information based on lagging indicators, lagging information that are based on price action as opposed to being based on the actual volatility. They don't even know about returns. They just care about price action, which is not a leading indicator at all. It is a lagging indicator, meaning it follows the volatility. And we know that returns mean revert. And if you've been watching my channel or the Alpha Trading channel, you would know this. And yes, this is I don't always talk about trading on this channel. I usually talk about marketing insights. Sometimes I talk about how that's related to trading, or how trading is related to marketing. But I wanted to give you guys a quick breakdown of why the VEPS information is the best information you can actually trade with in today's market conditions. And it has been for years, and it will be for the foreseeable future until some better model might come along. Now, why is it that VEPS information works so well in the market? Well, it's because the maths, right? The high frequency trading firms that control the vast majority of trades on the markets trade millions of trades per second with their bots. Again, millions of trades per second. And they're moving big bags, large positions, a tiny amount, and taking profit very quickly. Their average trade lasts less than 0.2 seconds, and that's as of some years ago. It's most likely down to far less than that by now. Maybe 0.1 seconds, 0.15, whatever. But even if it is still 0.2 seconds, how many trades are you running that last 0.2 seconds and you're actually able to take profit on it? Probably not much, right? Right. And the reason for that is your connection to the markets is nowhere near as good as the connections of the HFT firms. And by connections, I mean, yes, the physical speed connections that they have with their lines directly plugged into the market computers, but also the people connections that they have. So it matters not just what they know, it matters who they know. And while you might think, hang on, I thought that markets had to be neutral and insider information was illegal. Right, it sure is. Doesn't mean it doesn't happen. Right, so, and even if we're talking about perfectly legitimate trades on markets, which is the majority of them, you still have insider information or inside type information from people that are working the desks at large trading shops or even small ones. And they are using their professional knowledge and their professional connections in addition to their extremely high-powered bots to move markets. Right? And they can do that by stacking orders, spoofing, which is not allowed, but they still do it sometimes. When they get caught, they get in trouble, as we saw with the case of the rogue lone trader, Navinder, out of England back in 2010, who, after working at a small bucket shop, went solo and worked from home and built his own bot and was able to compete with HFT bots to a degree that he was able to make significant gains in the area of, he was getting towards hundreds of thousands of dollars a day, even some days millions of dollars a day in profits, until he wasn't able to anymore because he was stopped by the authorities some years later after the infamous flash crash that was blamed on him because of his bot basically spoofing orders. And if you don't know what that is, it's basically when your bot is making a bunch of entries into the order books, stacking orders to basically move the price towards your supposed target entries, and then canceling the orders. And if you do it once or twice, I didn't want this position, it's not so good. Okay, that's fine. But if you're doing it, dozens of times, hundreds of times, thousands of times, that's considered hoax, spoofing, and that's illegal on traditional markets. But the thing is, on crypto markets, it's not illegal. In fact, bucket shops do it all the time. They will stack orders and spoof against their own traders and make people feel FOMO or feel FUD. Basically drive people into a state of panic one way or the other, price going up or down, and make people make late entries and then have quote-unquote technical errors that prevent people from getting out of their positions until their servers are back online or whatever, and thus a lot of people get wrecked, especially if they have leveraged positions, which is another reason you should not trade with leveraged positions, because the risk is just too great. So, to keep it short, the bottom line is what we're seeing in Bitcoin right now is nothing to be surprised at if you trade with leading information. If you trade with lagging information, then, well, it's no surprise what's happening, and you really shouldn't be shocked at all to see the markets move against your position because you're using bad old information, right? Anyway, some food for thought, and hopefully you'll be able to use that to your advantage as a trader. If you want to know more about how to trade properly, check out Alpha Trading. The link is alphatradinghq.com, and you can go to the Discord link that's there at the top of the page. It's free to join the Discord. You can even get free indicators from Alpha Trading, where you can learn to trade those indicators for free. And you can learn to trade volatility, probability, statistics absolutely for free. There's all kinds of educational information you can get. There's no shortage of great information you can get about how to do that. The crew there is very helpful. The traders there are very helpful. People are happy to answer questions, and help you learn how to trade properly with leading information, as opposed to getting wrecked by using lagging information based on garbage indicators that haven't been good in many years, if ever, because they are literally designed to fail most of the time in order to keep the game rigged in favor of the people who have the HFT bots. Alright, said enough. Good luck and happy trading. See ya.